This is Pat. I want to go over some trades here today I did with Vantage. First one was a total disaster. I purchased it on 12/2. That was the Baxter. I purchased right up here. My mistake was these lines were kind of pinching. It was actually kind of an uptrend, then it went sideways. This pinching and possibly reversing. This was starting to pinch down a little bit. I kind of jumped the trade because I saw this potential profit area. Anyway, it wasn't a good trade. Here you can see they were trying to break through this red line, which they didn't do. It was at the top of the RSI. It was a bad trade. Short after that, it just switched over, and I should have watched this chart as it started closing downwards. Is this closed right below here? I should have gotten out, but instead I stayed in. These options expired worthless, which is not a good thing, but that's just what happened on those. It was a careless move. So all these trades here expired worthless. That's the ones I purchased on the 2nd. On the 7th, I purchased a flurry of different stocks once again. And again, here's the 7th when I purchased them. Options, and again, the options, they went up. I sold off a couple there. I had some stop losses set, which stop losses are not a good thing because here I lost 2 stop losses, got hit, down 30 and 47% respectively. I'm starting, these stop losses are better. You watch this manually because you can get some big spikes. And again, on the 20, I got stopped out on the 22nd, like the day later, and then she shot up after that. So I got to be careful with stop losses. I think you're better off doing these manually. Watch your stocks day by day. Then my next set of stocks, next set of options, again, I got in at a decent time, but again, the time decay and everything, they went against me a bit, and I lost 56% and 47. That was a stop loss, but this one I lost 56%. But the next two, I made $1 and I made 39 cents, which is 74 and 85% profit. Now this was kind of a foolish move. I was just not watching. I was not paying attention. I was off my charts for a week or two, and here I lo and behold end up selling these at a big loss, 46 and 13% or 19% stop loss. It was careless because had I been watching this when I saw it cross over, at least I could have gotten out right when it crossed below the medium line at least, and I could have gotten out right here, but I wasn't paying attention. Instead of taking a nice profit, I ended up taking a loss, which I shouldn't have done. The other loss is basically stop loss, and the first loss, which is a big one, where they all expired worthless. There again, I bought when it was pinching tight. So learning a lesson from this stuff, learn to pay attention more carefully. Next one, I got into the trade on the 21st, which was right here. Immediately went against me a little bit, but again, they got a nice spread here. It was looking positive. This was looking great. Nice spread between the two lines, pointing up. I didn't have the Williams indicator at the time, but this is a Williams indicator, which is a big, strong reinforcement. It's going up here. This going down lower, saying buy. Ideally, it should be below here, but it still told me to buy. I didn't have the Williams again, but I did buy it here. And I sold out. I bought on the 21st. I sold out some on the 24th. Just a few days later, that made me 173%. Then I sold off a few more on the 29th, which is right up in here. And those made me 73%. And I held out for the home run, which I didn't know I was going to hit. I just sold those on the 13th. And those made me 345% profit, or 90 cents on a 26-cent investment. So that worked out very nicely on that particular stock, DNOW. And the virus is my next trade I got into on the 3rd of the month, 3rd of February, which is right about here. That went quite nicely in my favor. I got out 2 days later on the 5th, and I made 139% and also 71% profit. I held a couple for the home run, hoping that didn't go with me. It was down 15%. I lost a nickel. But again, I turned 90 cents into $2.05 in the one trade, and I turned 35 cents into 60 cents on the other trade. So I cannot complain. In the 35% of the last trade I tried for a home run, of course, didn't work out. That's all for now. Just looking at the trade I got into today. The option expires on April 17th. I purchased some options on Workhorse because this looks positive. The wheeling is not real strong, but it is working its way up, kind of jig-jaggedy, which scares me. Although it's going down towards the buy zone. This is starting to turn over now, and the RSI is right towards the center line pointing up. So I feel pretty good that this has some good up movement. Again, I've got 2 months almost on these options, so I've got over 2 months basically. I've got plenty of time. They were very inexpensive. I paid, so I did pay 20 cents, but I purchased a 50-cent option for 20 cents. How can you go wrong on that one? Look at Johnson & Johnson. I purchased this on the 17th, which is right about here. So I purchased it, $155 calls. I also purchased some $150 calls for a lot more money. Now the more expensive calls that were in the money, they did make 124%, $202.63 each, just about 13 days later. But now the out of the money calls, they made 154%. So once again, and on the second lot, I sold those at the very end on the 13th, which is yesterday. The thing shot up, but I made 221% on those. So I turned way out of the money call of 63 cents into $2.02, 221% change. Pretty good. So again, once again, when the market's moving, the out of the money calls move quite a bit better. You buy them for a lot less money. So does Vantage Point work? I would say so. What do you think?